We are live, the State of Real Estate podcast. I'm your host, Adam Lowry, as always. Behind the camera, actually, Patricia May is usually on the camera as well. But today, it's just myself, unfortunately, for you all watching, because it's much better to look at her than myself. But welcome to the State of Real Estate podcast. We are sitting here with Steve Barger and Moises Alvarez. Barger.
Yes, sir.
Bam. I had to come back and do it, man, with the home team of Freedom Mortgage, guys. Welcome to the show.
Thank you. Thanks for having us.
Yeah, I appreciate it, man. Why am I struggling to hear you right now, Moises?
Find out.
There we go.
go.
Oh, man. If it is a Monday, is it not, Steve? My God. For you guys, it seems to be awesome. You guys are high energy. You're like, yeah, let's do life. I show up. We got mixer problems. I'm muting Moises. I say your name wrong.
Okay.
This is a Monday for me right now. That's what's happening, guys.
We call them Manic Mondays.
Yeah?
Yeah.
Okay.
Things are going to happen.
See, manic has a different meaning for me. I was a psychologist for a long time. So when I hear manic, I'm like, really? Are you taking care of that? So,
Wow.
I understand why you went into comedy then.
Yeah, right. Yo, God, tell me about it, man. Those jokes never go over well, though. Anytime I try to do mental health jokes on stage, they're like, no, it takes the oxygen right out of the room. It's not good. It's funny to me, though. Funny to me, man.
Sure.
So we're not here to talk about that. We're here to talk about mortgages, the real estate industry, all that other stuff. But before we jump into that, if you would, tell me a little background about each of you, how you got into real estate, what brought you this far, maybe where you come from, that kind of stuff. Just something brief. Moises, if you want to start, or Steve, you'd like to start?
Sure. So I'm originally from Panama, Central America, born and raised, 18 years. I moved to the United States 1 week after graduating high school with about $300 in my pocket, and spent the first year up in Michigan. It was the worst year of my life. And talk about, coming from the tropics straight to the cold, wintry hell of Michigan.
Yeah.
And came down here on spring break to visit my brother, and I moved to Florida immediately. I said, this is a lot more my speed, closer to Central America, the tropics, than anywhere north of here. So I don't think I would ever live any further north than Florida.
I'm with you.
Almost immediately, I went into the mortgage industry just through a temp agency when I was 19 years old. I had no idea what a mortgage was, but they placed me there. 90 days later, they gave me a full-time job, and that was almost 24 years ago. So that's what I've been doing for the last 24 years is mortgage.
So you're in it. I mean, my friend who's joined us here live, we interviewed him last week, Ahmed Arbitrary. He, too, came from a place called Egypt and had $300. What is the $300? Is that what they
That's
give
what you need to make it here.
I'm like, is that what they give you? Is that the customary? All right, you're leaving the country, going to America. You're going to need $300. That's it. That's all you get.
200 is not enough. 500 is too much.
Right. And he jumped right in the real estate business. You're right in the real estate business, right? So, Moises, what's your story, buddy?
All right. So I am originally from Miami, Cuban
and you
descendant.
left with $300 and you came to Orlando. Is that how that worked? I
was a little bit luckier than Steve, my friend here. I actually came with family, moved to Orlando, became a native Orlandian. I mean, I feel Orlandian 100% through. 17 years old. And started running restaurants, Hooters of America.
Yeah.
Did that for about 12 years.
Oh, wow.
Traveled the U.S., opening up restaurants, learned a lot about hospitality and managing and really just dealing with people. And in 2004, I took the leap and I decided to go entrepreneur. And that's when I got my mortgage license. And since then, I've been in the mortgage industry. Did take a small break in 2011 to open up a tax and accounting franchise business with my father. I retired from that in 2016, and that's when I met this guy again.
And how did you all meet? What's your story? How did you guys come to partner together?
Do you want to say it or?
Sure, absolutely. We met at church.
Okay.
And
trustworthy place to meet a partner.
We weren't trying to do missionary dating, but we did meet at church.
I see you got jokes now. All right.
Hey, we gotta get through this, right?
Yep.
So. We were a part of the same small group. We don't go there anymore, but we did stay as friends and followed each other on social media and ran into each other at a BNI group, actually, that we were both attending, and decided that it would be a good fit to try to do mortgages together. And the rest is history. About 2.5 years ago, that we've been working together.
All right, 2.5 years now.
Yep.
Now, what's your side of the story? Because, there's one side, that side, and what really happened.
The truth,
Right. So,
well, that's exactly what happened. We met at the BNI group, and I was with another mortgage firm at that point. And getting with Steve, he was aligned with a lot of the vision that I had, and it just made a lot of sense. And again, meeting through a life group setting, it definitely created a trust factor. We were taking care of each other's families during these life group meetings that we would have. My daughters would take care of his kids, and the adults would go and talk and stuff. And we really got to know each other. personally inside, not just on the business side. So
That's so important for you going to business with somebody.
Yeah.
So many people just go, hey, good idea, good idea. You got money, I got money, cool. And then like a couple years later, one of them's like, I hate you, I can't stand you. Right? They part ways. So that's a good way to start a business.
Yeah, I think having good work ethics, which is something that, I knew from him personally, was a key element for both of us, that we're going to, put all of it into it together. Because as a partner, it's tough. If you guys are not both putting into it what you think is acceptable for each partner, that's where the conflicts start beginning. And communication is always a key, because it's never always perfect, but it's definitely been going the right direction.
It sounds like an actual marriage or relationship, right? Isn't that what they usually tell you? Communication is key.
Well, I mean, a lot of marriages now are kind of narcissistic. People look for the people that are just like them, and
Right.
then one of them is redundant. So
that's
I would
deep,
say,
man, that's deep.
I would say that we do complement each other a lot. A lot of our strengths are different. We have some of the same, which is cool, but at the same time, Moises has a very good way of presenting things and makes people feel good and warm and fuzzy inside. Sometimes me not so much. I mean, I've got a good smile, I'm told, but Moises is definitely stronger in connecting and on that level of really making people feel at home with what we're trying to do. And sometimes I just bury my head down and do the nitty gritty details of the business.
Yeah.
That's very important in order to make sure that we close loans on time, which is what we do.
That's a great partnership. I mean, what was lacking in the mortgage and the lending side that maybe that you all shared in a vision right before you started this, when you took the leap, and you've been in it 24 years, so you've seen it. What was part of that vision that brought you guys together? And I'll go to you actually, Steve, because it was 24 years you were in it, right? And then obviously you've seen it change, do different things, multiple visions, and then you meet a partner where he said he had a vision that you guys shared similarly. So what was not happening? What did you see missing for 24 years, and how did your vision come together?
Well, a lot happened in 2007 when the mortgage world went boom. Fell down, went boom.
Yeah.
And we had to kind of reinvent ourselves as an industry. But it wasn't creative financing. It used to all be creative financing, right? It's who had the coolest bells and whistles, who could get someone to qualify that shouldn't qualify for a mortgage. And that's how we got in a lot of trouble.
Sure.
Now it's very black and white. It's very, you have to be full documentation. You have to prove your ability to repay. The government insists upon that no matter what kind of mortgage you get. You have to be able to show that you can pay this mortgage back, or else we don't give it to you. It became so black and white that it became difficult to compete. So we have to look at different avenues for a competitive edge. So one of the constants, or the only constant I would say in our business, is change. Mm-hmm. If you're not adaptable, if you're not willing to grow and learn, embrace technology, do the things that are necessary to move forward in an ever-changing environment, you're not going to make it. We can't be the Blockbuster of this world. We got to be Netflix, right?
Right.
And so that was one of the things that I loved about Moises. He was always ready to try new things, embrace the unknown, knowing that whatever came our way, we would just grab that and make it something that the customer, the end user, could trust. It was a business model that we're going to show them that even though it's a lot harder to get a mortgage now than it used to be, we're going to give them this feeling of, we have your back and we've got this thing down. You don't have to be the expert, but we are. We have a lot of experience, and we're willing to change whenever the government says we're going to do it a different way. We're going to change. We're going to do things differently. We're going to use technology. We're going to let you do an online application. So many millennials only want to do things online.
Sure. There's
so many things. Instead of making people do business the way we want them to, we will do business the way they want to. And so Moises and I both have that mentality of we're going to meet the customer where they are in a very difficult environment and make it work for them.
So true. I mean, when it comes down to adaptability in this business, I mean, it's one of the things that Steve and I talked about since the beginning. How do we get to a position where we can streamline the process, make the client feel comfortable, confident in a business that lost a lot of trust?
Oh, yeah.
In the loan officer position. So becoming an expert in what you discuss, what you talk about with your clients, make them feel, like Steve said, warm and fuzzy. It's true. They gotta connect with you. It's not just a black and white. Give me your W-2s, your pay stubs, things like that. You have to relate with the client, what they're going through, what is scaring them. What is really scaring them to go to the next step. And Those are the kind of things that Steve and I, we probe, we ask a lot of questions so that we understand where the client's coming from and work at it in that way.
Yeah, I can see how the visions came together. For a lot of people that may be buying their first home, right, may not know too much about it, right? Let's hit on the cusp of what mortgage lending kind of really is, right? We get it that you get a loan for a house, right? Some people go that far, but what are the different types? What are different kinds of loans? What can people expect? Is it as simple as black and white? As like, here's my stuff, here's my information, yes or no, right? What are some of the different types of loans that are out there for people?
Okay, so we have narrowed the field, like I said, from the whole creative lending aspect that we used to have, where you breathed on a mirror, and if it showed fog, you got a loan. Now it's very black and white. There are a few loans that have risen to the top as being the most popular ones, and that would be the FHA loan, because there's no more subprime market. So the FHA loan is the closest thing to the subprime market we used to know, where people with a few dings on their credit can still get financed. So that is a probably the most popular loan right now. Of course, that's only for first-time, or not first-time home buyers, but primary residences, right? So that's why you have conventional lending as well. Conventional lending caters to people with a little bit better credit. The debt-to-income ratios are a little bit lower, so you can't maximize, but you can also buy second homes and investment properties, right? And your credit score dictates a lower payments a lot of times. You get better interest rates, you get lower mortgage insurance factors. With having good credit and using that conforming loan, you can also get a bigger home, because the limits are a lot higher on conforming loans than on the FHA loan. So those two would probably be the biggest ones. And when you hear Fannie Mae, Freddie Mac, those are the conventional or conforming loans, used interchangeably, those terms that you hear about. And then, of course, VA loans are another one for our veterans that have served, so valiantly. We want to give them a leg up. And so the VA loan gives them 100% financing, which you don't get with anything else other than maybe a rural USDA loan, which are available but very rare. The VA loan is great for our veterans to be able to get in with no money down. So those are probably the three that I would focus on. When you come to us, you're probably going to go into one of those: FHA, conventional conforming, or a VA loan.
Sure. As somebody jumping roughly new, versus 24 years, right? You've been in it now a couple years, right?
No, a lot longer. I remember
years?
I started in 2004, and then
Okay, so you're 10 years in just about, right? Yeah. So 10 years in. When you started back then and not knowing much about it, right? What was something that maybe surprised you, right? Of somebody that kind of jumped in the lending business, maybe back then or even now, maybe something that still surprises you.
One of the programs that's surprising me that I think that it's not being used enough, and it's even since then, it's been around, it's the renovation loans, 203K, and then you also have the home style conventional, which a lot of folks don't actually know about the home style conventional loan. They only know the 203K FHA loan. But it's a great opportunity also for buyers to get involved with this type of loan, because it gives them the opportunity to have more inventory, meaning they can get into homes that are inhabitable and make them their own, so they can customize their homes. A lot of times realtors won't understand this type of product, so they won't show clients properties that are either bank owned that need a renovation loan, or even investor properties, right, that you think are only going to go cash. You could actually put in a full offer, right, and be able to do a conventional loan on it. So it does open up a lot of opportunities. We've hosted a handful of workshops last year, this year as well, on the renovation loan product. I feel it's starting to pick up. We have a good handful in our pipeline, and we're seeing a lot of movement and people asking questions because, Orlando's lacking inventory.
Yeah.
So this
Big
is an
deal.
opportunity to get into properties that a realtor just wouldn't look at because
Sure.
it's inhabitable. And this is a great opportunity to make it your own.
Yeah, that's definitely a big problem right now. The housing shortage is a real deal here. I'm a Orlando native. I'm born and raised here, so I've seen it grow, change.
Very rare.
Yeah, there's like three of us. I've seen it go from orange grows to you can't find a house, right?
Right.
Or much less find affordable housing for people. While I'm on there, where do you guys see the future of something like affordable housing changing? Some things maybe they could change that could help maybe the city of Orlando and Central Florida bring some affordable housing to the market. Just speak on anything in that range anyway.
Well, obviously, more inventory. We
Yeah.
have to build some, and we have to target that price range. There's a lack of inventory in about the 150 to 200,000 range, where a lot of people are comfortable with their payments, and that's what they qualify for. We just don't have as many homes available right now. So as much as sometimes it's difficult dealing with a builder, you're going to need to see some more homes built, honestly.
Yeah. And I'll piggyback to that. I mean, when it comes to when you're looking for a home, what I've been seeing a lot of is the buyers are still feeling sometimes like it's there's a lot of negotiation powers still that you can still take on. When unfortunately any property within the 200s to the 270s, we're seeing multiple offers. You know, if you're requesting for seller contribution, a lot of times we're seeing those offers are not being accepted. So we are seeing where the sellers still have, you know, the upper hand. It's definitely a seller's market. So if you're a buyer, you know, an agent, you know, putting your best foot forward and not thinking that you're going to go back and forth in a negotiation, because you may not even have the opportunity. If there's 4 offers on the table, they're going to take the best offer, and you're out of the negotiations. So putting your best foot forward is always going to be a key in obtaining the property that you're, you know, looking for.
Yeah. What's something that you would tell, well, any home buyer, right? Maybe who's looking for a loan, something of why they need to come to see you all?
Oh, well, that's easy, because renting in this market, and it's not this way all the time in every market in the United States, but in Orlando and Central Florida, renting on average is $200 to $300 cheaper to own the same place. So that makes no sense to continue renting a place that's going to pay $200 to $300 more per month and then have absolutely nothing to show for it. One of the things that people struggle with the most is saving for the future, right?
Sure.
Putting money in that savings account, taking part of their money from their check and putting it away is almost impossible to do. But if you have a savings account growing in your property because you own it, and in this market it continues to grow in value, you're saving $20,000, $30,000, $40,000 without even trying. You're only making your mortgage payment, and suddenly you have this equity that you can use and dip into for the future, either college, go to Vegas, whatever you need to, right? Whatever you need to do, you have money for in your home, just by the virtue that you're paying your mortgage instead of rent. So it just makes no sense in this market to rent.
Let's not forget the tax breaks you get from it as well. You know, writing off all the interest payments that you have, which in the first, 5 years is a big chunk.
Sure.
Pretty much everything is interest, right? So you're able to write that off. Any repairs you do at the home, you're also able to write off. So you're able to get some additional tax credits that can also offset what you would, literally be paying for rent. You could be getting that back as well. So, I mean, there's just so many opportunities, by owning a home.
And what if somebody's doesn't think they'll qualify, right? What if somebody's kind of on the fence, like, I don't know. I mean, what's the risk of trying, right? Versus some people that maybe think they're on the fence. They don't know. Maybe they think they are close. I mean, what's some magic, you guys can do? I don't know. I'm kind of throwing it out there.
Yeah, the biggest reason people don't think that they're going to qualify is because they check sources that they think will give them an idea if they qualify. Certain places that tell you that they will give you a credit score, but it's not really your score. It's not what's used for mortgage qualification. What they need to understand is that we check 3 bureaus. We throw out the top score, we throw out the bottom score, and we use only the middle score, and that's across the board in mortgage financing. We don't go to Credit Karma or anything like that to look and decide where your credit is, which is they don't have access to all 3 bureaus anyways. So they're coming up with a hypothetical score that's not going to help you in purchasing. So a lot of people don't think they qualify, and they just need to try. That way we can say, hey, you don't qualify now, but if you do X, Y, and Z and you work on some stuff, you'll qualify in the future, and they at least know where to start, and they might be ready next year. They're not ready this year, but that's still much better than renting for the rest of their lives.
Yeah. And the follow-up to that is why should those people come here? Why should they come see you two specifically at your office? To be specific, why should they come see you?
Well, I mean, one of the things that I feel separate us from a lot of the lenders and the agents and our clients that know us, we want to educate the client. We want them to understand it. That's one of the things that we talked about earlier, just really connecting with the client, making them feel comfortable. Because, I mean, we're digging in to their life, right?
Yeah, right.
How much do you make? What's your SS number? I mean, everything.
You're actually digging in than most husbands and wives do before they get married.
You'll be surprised. We know, sometimes we know more than they do. They're like, don't tell my husband that. Just kidding. But, I mean, it happens. I mean, it's all on the table, of course. But, getting close to them and either, working with them how they want to be worked with. If you're a millennial, a lot of them like to work through their phones. We do, face to live. We can meet up face to face. We have multiple opportunities to either meet, submit documents to us where they feel comfortable and they can feel like they're being taken care of as well. And that's a key part, educating them and making them feel comfortable and giving them a solution to be able to find a house, right? If they don't qualify today, like Steve was saying, we're going to find a solution to put you in a mortgage plan. If it's 2 months, 3 months, 6 months, we're going to tell you what you need to do. And if you follow those steps, well, you're going to be a homeowner soon.
Yeah. I think that there are two big reasons also to come to us. A lot of other lenders will tell you, yeah, we can do it, and then they'll try to figure it out later. We are very transparent. If we can't do it, we'll tell you up front. It does nobody any good to give you false hope. We're going to do our homework. We're going to tell you up front, these are your challenges. We're also going to give you options. Say, hey, this is the loan you have to take. If there are options, here's the pros and cons, and educate you on the different options so that you can pick what's best for you and your family. It's not me to tell you which loan you should have. I'll make a recommendation, but I'll give you options. So I'll give you options, and I'll be transparent about the entire process. And so will Moises, obviously, and our entire team. That's the way we approach business. We don't just go and say, we can do it, and then figure it out later. And we don't say, this is what you're going to get, take it or leave it. We really want you to be in control, because most people only buy 2 to 3 houses in their lives. This is the largest financial commitment that anybody makes, usually. So it's very important for them to feel, that we are supporting them in making their decisions, and it's their decision to make.
Beautiful,
man. That's why he's my partner.
All right, start the paperwork right now. What do you need from me to start? I'm in. You dropped me in, man. So I recently saw an article that had come out. We actually shared it on Venture Title's page about the interest rates being at an all-time low or back down low again. Speak on the rates for you.
Well, I'll tell you, I'm going to jump a little bit on it. My partner's really, really intense on it, but I would say that the rates are super good right now. I mean, fairly to what you would rate as, years back. I mean, I would say, it's hard for me to quote rates because it all is based on someone's credit report, their credit score, how much they're putting down, if we're having to go FHA. So when someone comes and tells me what's my rate, you really can't tell them what the rate is, right? I mean, we haven't even locked the loan. So there's a couple things that are missing. But if we're needing to give you an estimate or I like to go from the low to the high, worst case scenario, because rates do fluctuate on a daily basis. We're seeing rates in the low 4s. If you're putting 20% down on conventional, you're seeing them in the mid 3s, high 3s. So this is with the higher scores. Yeah. So the lower the score, the higher the interest rate. So, but the rates are fantastic. You want to add something to that?
Well, yeah. A lot of people look at television and radio. They hear a rate advertised and they get all excited, right? And you got to understand that they just want to start the conversation. So they're going to give you the best case scenario. You have an 800 credit score. You're putting 20% down. You're borrowing $200,000 or more. There's a lot of factors that they're trying to give you the rock bottom rate, and then you come in and you say, well, why didn't I get that? Well, it's because you only have 3.5% to put down. Your credit is only 640, not 800. You want to only borrow $100,000, which is a slightly higher interest rate because it's a lower loan amount. There are so many different factors that go into it. It's called risk-based pricing. They start with a base price, and that's all they advertise. And then your individual situation gets added on top of that to come up with the final rate. So people have to understand that. They're like, my neighbor got a 3.5. Why are you quoting me 4? Well, your neighbor put 50% down.
Your neighbor's better than you. Your neighbor's better than you. That's why I just.
And he's lying to you. He got 4 also, but he told you 3.5. So, there are those things. And we try to explain why they are where they are. But yeah, definitely there's you have to have somebody that can explain the market a little bit to you so you understand what's a good rate for you. And not only rate, payment. Sometimes we back into it by payment. What are you comfortable with on your payment? Because you don't know what that means as far as 4% interest rate, 4.5%, 3.5%. Most people don't know if you tell them the rate, what their payment's going to be. So if you start showing them payments, we can back into it to what they can afford and get them in a house that is good for them based on their payment level of comfort.
Yeah, their position as well.
Yeah. So the final question that we ask everybody on this show, obviously being the State of Real Estate podcast, right, is individually, what is the state of real estate to you?
I'm going to go ahead and say right now, we are feeling very aggressive and very positive. And, we got to get ahead of it because there's going to be a lot of movement this year, we feel. Obviously, there's talk about things happening in the near future. There's, real estate is a cyclical business. Eventually, right, there's going to be a time where there's going to be a slowdown. But right now, what we're feeling, especially during tax season and all that, we're seeing a huge influx of, millennials, first-time buyers coming in, taking advantage of that. So we see it very strong. I'm feeling a very strong year.
Yeah,
I agree. It is very strong, and it's going to continue to grow for the unforeseen future. I think that anything could happen at any time. We know that just from history, but right now every indication is that it is healthy. It's growing. It is going to continue to grow. You want to get in on the ground level if you can. I mean, that may have already passed, but get in as soon as you can to a home of your own so you can start building that equity. And you can start saving that money, because if you wait too long, you're not going to be able to afford the house you want, because the way it's going right now. It's going up and up, and that same house that's $200,000 this year, next year is going to be $250,000. You might not be able to afford it. So
I can hear some people that bought homes just hear you say that and like, woo! They're already screaming like,
so don't drag your feet. At least do the homework to find out if you qualify or if you need to work on it to qualify.
That's right.
So the last thing too, sometimes we have there's a thing called podcast remorse, and it's real. I promise you. Sometimes you come off a show and you're like, oh, I forgot to say that. I wanted to make sure I brought this up. So I take the end of the show for that time to give the guests to think about that. Is there something I meant to say, I wanted to cover, something I should have said? You'd probably say, hi, Mom, hi, honey, kids, just leaving that out there, right? So when you go home and show them. But yeah, that's that moment to kind of say anything free that you wanted to talk about or wanted to make sure you said.
Basically, that we're available. We are happy to be here. We are so happy for our team that supports us. We are with Freedom, the home team of Freedom Mortgage, a very solid team that has our back and gives us a great platform to serve the community. Yes, hi, Mom. Hi, kids. Hi, wife.
There you go.
Hi, everyone else that makes our lives possible. We can't do what we do without you.
Good man.
And I'm just going to piggyback just to him right there as well. Hey, babe. What's up, children? Yeah, we're such with a great team. I mean, they back us up. They're all about educating, branding ourselves so that people know what we're doing. We're growing as a company, and we're making an impact. We're changing the community, and we're being part of the community. So that's just a huge, huge plus for us, and we're very excited about that. And I mean, for us to be in a company that actually follows our vision, that's not, you don't find that too often. So we're definitely blessed.
And a partnership that shares the vision.
And
man.
A partnership. Amen. What's up, Ba?
I'm surprised I didn't have some special handshake pop off and start throwing signs, Mr. Miami and Panama over here. Let everybody know, where can they find you? How do they find you? How do they reach out to you?
We're right here in the heart of Winter Park. We're in Hannibal Square, 444 West New England Avenue. But you can reach out to us. My phone number is 407-346-5146. You can also look us up on... I don't care. I'm an open book. You can also look us up on Facebook, Moises Alvarez and Steve Barger. We have a business page there that you can look around and poke around and see a bunch of reviews on us, the people that actually do like us.
Yeah. You can reach me at 407-346-3093. And I'm just, again, really stoked to be part of this team and be part of this podcast. Thank you for having us over. This has been great.
No, I appreciate it, guys. I love the energy, man. It's definitely a wonderful place to be. Since we walked in the door, just for you all out there watching, this energy is not bull. This is real. When I walked in, it was a happy place. The guys were excited to have us here, man. I felt at home and comfortable the moment we walked in. It's real, guys. So if you're looking for somebody that really cares about you, that's going to lean in for you, embrace you the minute you walk in their back door, which,
yes,
which we did. We walked in their back door. I'm telling you, these guys are the guys to see. So I appreciate you guys for being on the show.
Thank you.
And thank you all out there. Venture Title, thank you very much for sponsoring the show and being a part of it. For all your title needs, make sure you check out rest1.com. That's where you can see all that. And then you'll be lucky enough because Patricia May, the other host of this show, gets to do all your closings. And we know that's what's important to at the end, y'all. So once again, thank y'all for being on the show, man. I'm Adam Lowry, your host of the State of Real Estate Podcast. We'll see you next week.